Hello, today is Saturday, the 28th of April 2012. The paper investment of AAPL, or other known as Apple, is up around 30 times since September the 29th, 2004. In this video, I'll show you technical analysis on this stock as well as an investment, really slash bet, that has well outperformed Apple. This chart below is priced and how much it has gained since this point, which is obviously well higher than 30 times. So we'll go over this later on at the end of this video, but Apple's up around 200 times since it started on September the 7th, 1984. The same alternate bet slash gamble slash investment, and it's all the same anyway, has outperformed the price of AAPL since this point. Not only has it outperformed Apple, but it has kicked its arse in yield gain, as this has yielded around 5,000 times its gains since this date. At the end of the video, I will reveal what this is and a little bit of a hint. The alternate bet slash gamble is as good as gold and silver. That's the hint. Furthering it more, think outside the box or within gold and silver's box. Okay, let's get started. This is the Apple chart. That's what we're going to focus on right now. And this is the 2-hour chart. Although only 3 of the 4 candles represent 2 hours and 1 represents 30 minutes. This one represents 30 minutes because it takes one period from 9:30 to 10, 10 to 12, 12 to 2, and 2 to 4. But with the amount of volatility that takes place from 9:30 to 10, you can really hardly tell the difference, but there's a lot of gaps within this, and especially the obvious one in here, which was kind of obvious, and I'll explain near the end of the video why it was smart to go long here and then sell on the open within here. And again, I'll explain that later on, but a huge gain of about 10%. It all occurred around right after the earnings happened after the session, and it went up pretty fast, and it was enough to make the Nasdaq go up huge for the day, when really the Dow and the S&P hardly did anything at all, which was a little interesting. So I got the Fibonacci levels, and just by looking at them, they're really just, it seems like they're in a random spot to me. However, if I take the Fibonacci from this high and this low, then I'll get a little bit of a different look, and one that's not quite as random. For when this bottom occurred, it had no problem getting past the first Fibonacci level. And when that happens, don't be surprised if there's a quick move to the next one. Bingo, bango, exactly what happened. Now you would expect, okay, this is a good time to buy, and quite frankly, it should find support there. And it did for maybe a few hours, but only in here. That wasn't much of support. And then the 61.8, when you include this high, which was pretty much in here, it didn't hold as well. But it is looking as if this move is that of a failed breakdown. So just going back to its original levels from here to here, the gap higher occurred within this second Fibonacci level and has since retraced lower. Now what I've done here is I've just put a green candle here. Notice this upper band, how if I put in just this candle to have a low where it closed, how the band goes up and around. Let's go back to the last chart that we had and notice how the band doesn't quite do that. No, it just, yeah, so quite frankly, these gap higher and gap lowers are a major pet peeve of mine, and they state, oh, the market's closed, really? Now, obviously, there's a lot of level 2 traders and people that can be making moves within it, but if you're going to have the markets move within these time frames, and it's going to move wildly, at least don't say it's closed and have it open for everybody. as a lot of times the wild moves will occur at 8 o'clock in the morning and 9 o'clock, and the market opens at 9:30 a.m. Eastern time. Let's take a look at this on the daily chart now, and you can see the gap so well on here. And I find it, just by looking at it, it's a little difficult to use the analysis within. So that's why I'm going to change it. I got a program that automatically takes a look at the data and states if there's any wild gap opens. It's just going to fix it and make it look better. So let's do that now. And notice this band here, how it's a little bit differently. Obviously still finding resistance, but in here it's well above it. Take a look at the next one, and here we go. Okay. So a little bit of a difference. Now, as far as this little area here, would I have bought in here? The answer is no. Would I have bought in? Well, I don't know if I would. I didn't buy any, of course, but this would have been the level that I would have been looking for if there would have been any support. I got a low of 377, which is this low in here. And quite frankly, it obviously been well above this support level, like on many occasions, and it had this little fall quick dip, and it's looking again as if that might want to be a failed move, which can oftentimes cause fast moves. Now again, the Fibonacci from here to here has not really gotten above it yet, and if this rallies a failed move, then most certainly the odds that we come down to the 525 level would be pretty decent. Let's take a look at this now on the monthly chart. And within the monthly chart, we have a low of 636, which occurred just a bit before the duration of this chart. If you see something like this, you can't say, well, what's the low? Well, the lowest point on here is right here. Obviously, if you look at the periods before, there's probably lower points, and the lower points in here would make a low of 636. And this thing just kept on going. So if anyone talks about stuff like silver being a little bit of a large market for there to be the wild swings where you have like $200-300 an ounce, well, obviously by looking at that, it's a myth, because Apple's a much larger commodity or a larger market cap than silver is right now. And it's not having a problem. So I'm not saying that's guaranteed that silver does it, but it's definitely not a reason why it cannot do it, is what I'm saying. All right. So when you're looking at a chart like this, if you think, well, when were the times to be buying this? Fibonacci retracement, was this a nice little bottom? Well, if you connect the lows of 636 to around basically 200, then maybe it was, maybe it wasn't. But buying on strength, there was some nice little periods in here. Question is, when do you sell? Well, you probably want to sell a bit maybe here, but definitely here, here, maybe now. Because if you're having these nice little gains, just because it keeps going higher and the possibilities for it to keep going higher is definitely there, you want to make sure that you get some profits along the way. But then again, what you decide to do is what you decide to do. And you can use Fibonacci upside to determine it. Right now, as it stands, there's a decent chance that when this thing does finally have some sort of retracement, that this line is going to be somewhere up here, which means this one would probably work within here. So if we look at price objectives for that to be the case, this is what we're going to find. Let me just, there we go. A $1,500 price objective for Apple. And I'm not saying it's going to go there, but only if it does go there. The bands would be placed within this chart at 186 as well as 51. Now, just by looking at 51, I think that maybe up and around here would make more sense, which might be more along the lines of 1,000 or 1,200. But again, trying to predict these areas, and even for the wens, this is a monthly chart. It could take like 60 periods, which is 5 years. It's very difficult to figure out. Let's take a look at this even more longer term, which is the quarterly time frame. And obviously, within this, it's been in a huge uptrend. The breakout point was really around $17. There's a point where silver had a breakout point around 17, and then people said at 50 that it was up too much. Well, at one point, Apple got up from 17 to 50. It did it in about a full year because you got about 4 candles on the quarterly time frame. Well, silver did it in less than a year. They did it in about 3 quarters, but still, regardless of the point, it went up to 50, then it had some resistance up around 200, and now it's up around 600. So when people laugh about silver going to 3, 4, 600 in 3, 4, 6 years, I'm not saying it will. I do think it's probable. And yeah, let's go on to even more within the Fibonacci upside within the quarterly time frame. And basically, for this Fibonacci line to move in here, because that's what I'd be thinking if we continue to go higher. This line would move up here, then this line would move to about 211, which again would be just a little too high. I think I would expect this line to be a little above here, which means this would still be in a good shape here, so maybe around 3,000 as a possible price objective if it keeps going towards the upside. So let's just finish it off with that, other than the upper bands, because quite frankly, when you have a move here, notice what happens. Now, these bands are not Bollinger Bands. The way they're designed is I take the 18 period average of volatility, which is the highest point, subtract the lowest point, divide the lowest point, and I take the front weighted average of that. Therefore, I can triple that volatility and have that from the increase from that level from the 18 period average of highs and lows, and that's exactly what's formulating these upper and lower bands. So you come up in here and spend really about a year and a half within this band, and all you do is correct for a couple candles, and that's enough to really take you well away from the upper bands to the point where it takes another year and a half to get up there. Serious correction of 2008 brought it back to the 18 period average bands, and now just recently it's back up towards this level. So to say that because it's at the band that it's way overbought, well, was it way overbought in here? Like, I'm not saying it's definitely going to go up because of that, but I'm saying it's definitely not a reason to sell because of that. All right, so that's it for the technical analysis. Now let's take a look at the investment that is actually beating the price of Apple. And here we go. It's actually the same thing as gold and silver. Gold and silver don't do so well between New York time frames, and Apple's along with it as well. For the price of Apple has gained about 5,000 times overall from 4 p.m. Eastern to 9:30 a.m. Eastern. This data comes from Yahoo Finance. I have tried to verify it the best that I can. I was able to get free stock charts data for Apple in the daily time frame. They only have the last 501 days, but it's exactly the same during those periods as well. The move since September the 29th, which is this bottom in here, has had gains of about 70 times off hours, yet it has lost 56.5% since here. Overall, it's lost 96.5% since the opening, but it's lost like so much here. We'll get into just the opening in just a little bit. Now, the only way it's a better investment to play a particular index stock or something during a particular period of time, day in and day out, is if the other time, quite frankly, loses. If this goes up, say, over a period of time 20 times, yet this one goes up 4 times, then it's a bad investment because it's just better to buy and hold and take the entire gains. But Apple is losing during the U.S. time frames. Now, if you started here, you're actually just better off just going at Apple because, or excuse me, if you started, say, here, back down where, or started down in here at this low, then it obviously wouldn't be such a great investment. but it doesn't do so well during those hours. So let's just look back at the start. This is I don't know how real this is. This is going back to the days where the charts would trade in eighths. So it was like a $24 stock back then, and an 8 point move was actually a 0.5%. But that means your stock could be like either eighth or 2/8, which was a quarter, 3/8, 4/8, which was a half, 5/8, 6/8, which was 3/4, and 7/8. However, every single day for about a year, it was the same. Apple would go down during the day, and it would go up not during the day. So from September the 7th, 84 to November the 20th, 85, which is a little over 14 months, it lost over 95% of its value just on US timeframes. That's a lot. And that's why now that when I go back to this shorter term chart here, let me just go back to one that doesn't have that gap move on it. That's why it was such an easy play to buy here and sell here, because you just didn't do it that day. You did it every single day, which means you bought here and you sold here for a loss. But overall, you're going to have a decent amount of gains along the way as well. So obviously, if you did it every single day, all you'd be doing is outperforming the price of Apple. But if you've been trying to day trade Apple, trying to go long for the most part, because it's easier to go long than it is short, then you might not be doing so well because Apple doesn't do so well from those hours of 9:30 to 4. Alrighty, thank you for tuning in, and have yourself a great day. Bye-bye.